Yeah, boy! Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. It could be, it may not be. Forex is risky, trading is risky, investing is risky. Not appropriate for everyone. Your past performance, good or bad, it's not necessarily indicative of future results. It could be, it may not be. But please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Good morning. Oh, yeah, I forgot. I rebooted my computer. Whoa, look at that. Dracula. They're like, Wayne, you suck. I know I am Dracula. I guess I can't do anything about that. Oh, no. Well, everything's messed up. I'm trying to line this up. I want to look pretty for you. I guess I'll do this. Hey, so good morning. How are you? Miguel. Look at Miguel. Hey, customers. What do you mean a customer service number? For what? For FX Bootcamp? Okay, that's me. What do you mean customer service? How big do you think I am, Miguel? Cornering the world? So anyways, that's funny. But you can email me, Wayne at fxbootcamp.com. That's all. It's just, I like that though. It's very polite, but dude, what do you mean customer service department? Yeah. But anyways. Yeah, way down 100. How's my driving? Anyways, yeah, just Wayne at fxbootcamp.com. A lot of those things shouldn't need customer service, but yeah. Yeah, sometimes, and by the way, I'm working on a fix for this. Sometimes people sign up for the training, and then it says, hey, congratulations, you paid. Here's a receipt and everything. And then giant letters that says, click here to create your account. And if there's a customer service issue, it's usually like they paid and they're done, right? They don't click on it, they don't create their account. And then, of course, there's problems. So I'll have to help you through that is probably what it is. But I've already hired someone to change that process so that it doesn't ask you to create your account. It just creates your account. And then it says, here's that. And if you don't like your password, change your password. But anyway, so I'm cutting a step out. That's the one wonderful thing about money. It doesn't make you happy, but it does solve a lot of problems. So I got you. I got you, Miguel. All right. So anyways, my name is Wayne McDonald. I'm the Chief FX Market Strategist for Traders Way and the sponsor of the Forex.Today community. 14,000 of us stationed around the world. We all love Forex. We love trading the US dollar, the euro, the Great British pound, the Japanese yen, the Canadian dollar, the Australian dollar, the New Zealand dollar, Brazilian hey-hi? Not so much. We would if we could. But anyways, thank you for being here. And please take the opportunity to thank the sponsor, TradersWay.com. Visit TradersWay.com, open up a demo account today. These webinars do not cost you money, but they do come with an obligation. Visit TradersWay.com. All they're asking you for is an opportunity to earn your loyalty and respect. You know what I mean? And they're making this available to you up front, so pay it back. You bought the, how do you buy, what did you do? Click backwards, Miguel? No, Miguel, come on, Miguel. I know, he's rolling over too. He's like, oh man, I know, Wayne, I know. And I'm like, I know, Miguel, I know. And you're like, I know. So anyways, we'll get you taken care of, buddy. All right, so I'm super happy. Life is generally good in the world. I know we're suffering through COVID, and this is having a negative impact on the economy and maybe our financial lives. But I still look out the window, and I think there's still beauty in the world. And there's still opportunity in front of us. I think about the average Joe on the street that has a really good job and they went to college and they work really hard at the office and they stayed late and they got a couple of promotions and and they bought a bigger house and everything's good. And then one day COVID-19 shows up and they're like, yeah, thank you very much for the last 12 years of your life. You're laid off. And that $600 of welfare doesn't go very far, unemployment. I don't know what you get for unemployment. Let's say your $2,000 in unemployment shows up. You're like, yeah, that's not a big enough nut. And there's nothing you can do about it. So I'd like to take an opportunity to remind myself by speaking out loud how grateful I am to be a foreign exchange trader and have the opportunity to access a $5 trillion market anytime I want. You want milk? The cows are there anytime, brother. Walk over there, milk the cow, fill your bucket. If you want more, there's unlimited cows. Somehow that's an analogy, but I am very grateful to have that opportunity and not be helpless in a time when many people probably do feel helpless. So thank you, Forex. Thank you, Forex. Thank you very, very, very much. Remember, as a venture capitalist, we had to wait years to see if we even got paid. I love the fact that you can walk into Forex.Today and withdraw money like it's an ATM. Thank you, thank you, thank you, Forex. So I just want to say that out loud, make sure we all have good karma. If you have negativity, check it at the door, because I'm in a good mood, Bubba. Okay? We trade Forex while other people binge on Netflix. I still can't get over there. Like, really? That's what you're doing? Yeah, well, there's nothing to do. I'm so bored. I've watched 45 hours a week, right? I've watched 300 hours on Netflix. Like, why didn't you just get a college degree? Like, that's how you use it. That's what you did with your free time. When you had a job, you begged for time off. And then you get time off, and what do? You watch Netflix? Really? That's really? Really? You binge watch Netflix. Well, I binge watch knowledge. So anyways, thank you for being here, guys. I know you think like-mindedly, so thank you for being here with me. All right, so let's move on.com. Let me get my drawing tool. Brazil! I love Brazil. Okay. You studied for 3 hours last night. I studied for 11 hours last night. All right, cool. So were you doing a statistical analysis of a price over time data set? Price over time. Okay, price over time data set. And measuring from this point, which is about June 15th, to right where we are now, measuring this data set in a grid, you will see that there's more rise versus, as compared to run. It's a little bit slightly more uptrend than downtrend. Cool. That's just the state of things now. That's great. And inside of that, there's a bullish buy zone, a bearish sell zone, and that's that. So whatever happens next simply comes from the volume, if you will, the amount of bulls or bears. Where we are now is generally neutral. So if you were selling closer to 75, I get you, that's good. If you're buying more around 74, I get you, that's good. This 74.50, yeah, you're stuck in the middle, bro. Okay, so make sure you know what you do. Make sure you know what you want. So one of the things we're going to do is we're going to go through all the yen pairs and make sure that we have congruency amongst them on this time frame. Okay, so they're slightly up, but no higher high. So it's weird because it's only an uptrend since June 15th. If you measure this back to June 1, it's sort of weird. It's weird. I mean, and I'll show you. I know I haven't released this tool yet, but I'll show you that. Oh, it's still got the old name. This should be 144. Instead, we'll make it 233. Okay. And anyways, you're like, okay, well, going back through time, and of course you can go all the way back to April. Statistically, still more up than down. Okay, right? Now, for the sake of, knowledge, for the education, for the sake of education, I want to remind you, we planned for this giant up. I called it the hot and fast, right? And I explained why based on behavioral finance. Then I said there would be massive profit taking off this price, actually, which is interesting. Not just the price, but the time. So we'd hit all our targets early, right? And then we would go into massive consolidation that will last longer than you want. Is that accurate? I just, for the sake of education, I want to make sure that we're not just getting stuck in the weeds here. We have to know where we're going. Is that the road was that the map that you were given? Because I think if you don't have that map, the rest is sort of nonsense, right? Like, oh, here's a compass. Okay, well, okay, I guess you know where north is, but you don't know if you want to go north or south. Okay, cool. So you got to start with that first, right? Great. Okay, cool. Okay, and let me go back to that actually. If we want to compare this to the stock market just slightly, these are the big growth stocks. And then here's the consolidation. Meanwhile, the growth stocks are still going up, right? So I think if we did something like this in August, what you'll see is like Facebook, Amazon, and Tesla and Google. I mean, all these guys. They're going to come down. I mean, not a crash, but they're going to come down because they're extremely overbought. And it's not selling of the stock market, it's rotation into things like the banking sector. Okay? So, I don't know. Let's see. I'm not really a stock guy. Tesla, times earnings. Hang on. If this doesn't go, sir. Or I guess maybe we want multiple. It's just bringing. Just trying to see earnings multiple. I don't know. I guess maybe Yahoo Finance will give me this data. Let's see. What date is this? Everything. The internet is so lame, man. It's just become nonsense. So okay, what that's not, is that Yahoo Finance? Wow, is it bad looking at? Yeah, it's so it pulls up old news. What is it? Google Finance? Google Finance will probably give me something, right? Let me just see if I can quickly find this. I'm trying to get this idea out of my head. This information should be easy to find. Let's just, again, I don't know what I'm talking about here. So Tesla, all right. Great, you put in a T and it pulls up Tesla. Great. Tesla, it's down to 1,500, but let's see, because it fell in March, right? Net profit margins, diluted earnings per share, net income, revenue. I want revenue. I want price. Again, this is nonsense. Who cares? It's amazing. They give you all the numbers that don't matter. I guess I have to click on more financials. Amazing. Is that how people trade stock off this crap that I'm being shown here? Anyways, revenue, net income, diluted earnings per share, net profit margins, operating income. What's the multiple, dude? It's so funny. Really? This is what people trade on? All right, anyways, I can't get over this. So I can't do this. It's amazing how slow this is. All right, here's what I'm trying to say. I was just looking at Google Finances. So here's what I'm trying to say. Someone's paying 40 times earnings to buy all these stocks. And right now, like the best bank in the world is JP Morgan. We know that again from this morning or yesterday, or whenever JP Morgan reported. They're still the best bank in the United States, arguably the world. And you can buy it for like 30 cents on the dollar compared to Tesla. Right? So you're like, at some point, you know, you get out of these expensive stocks and you buy something good, but cheaper per dollar. What's an analogy in, yeah, anyways, I was going to kind of bust it out how you do that in real estate, but anyways. So let's get back to this. I'll just move on. So we're looking for congruency here. Okay, congruency. Go to the 4 hour and yada, yada, yada. So we had this up here coming down and then maybe going back up. If you remember, we also had a plan B. I remember doing this, so I hope you remember it. We did all of this up here, in fact, and we said probably down, right? I had this resistance. Okay. Do you remember the plan big, expect small? That's the speech I was giving here. Okay. So we hit this, This was resistance. And I say, look, if it's going to break up to the upside because we're bulls, because we bought this. So if you think it's going to go up, it's not going to go straight up. What it's going to do, and so I still have this drawn, is probably, right, something like this was the plan A. Plan B was it continues the cycle. So you have to decide, are you buying here and here, or are you buying here and putting your stop down here? I hope you remember that. Now, I don't like that type of trading. That's really lazy trading. So in the sense of buying it here and putting the stop down there, you can see there was never an opportunity to buy this if you were trading properly, based on proper technical analysis and all that kind of stuff. Okay? Now, if you, going back to our conversation yesterday, if you're missing good trades, the market opened right here. You should have just bought it and walked away. Done. Took you 12 seconds. And the reason it took you 12 seconds is we planned this a week in advance. Why does it take more? Okay? Yeah, it's 1,500 now. Yeah. Okay. Wait. What does Brad say? But Wayne, I've been selling yen. I haven't told you to sell yen pairs every summer. No. If you want to know like the Wayne McDonald rewind, summer is like this, and typically we're talking about shooting at rabbits, which means you're basically spot trading. You're trading one session at a time. The language I'm using this time, Brad, is you're planning big, but you're expecting small, which means if you're staying with these yen pairs, you're still, if you're a bull, you're still buying in your swing zones, but you're not really quite expecting it to trend. Okay? You're still buying here, but you're not expecting it to trend. But at least you're buying at support. Okay? Now, Brad, typically then I say in August, we start planning. In particular, around August 15th, we regroup. So what I've done in years past is I take a little holiday. And we re-adjourn around August 15th to plan for the third week. And by the third week of August to the third week of September, we are buying yen pairs. Okay? But every summer, I'm not buying yen pairs or selling yen pairs per se, like the way you're thinking about it, or at least the way I'm interpreting it. There's no trend in summer because nobody's trading. Oh yeah, yeah, yeah. No, 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 no. Let me say it this way. No one is trading except you. You're like, well, someone's trading. Okay, someone is trading. But let's think of it this way. You want to be a boss, but the people that are trading right now are like the associates. Associates. Okay? These are the summer interns, the MBAs on intern. This isn't big money, guys. So let's rewind again. And I didn't mean to get into this today, but you guys are dragging it out of me. I asked you earlier to make a decision. Are you income trading right now or asset appreciation? Okay? And the plan big, expect small is sort of an income point of view. If you know how to trade, there's no shadow of a doubt that that's a buy zone, and there's no shadow of a doubt that this is an exit zone. No shadow of a doubt. So you take the money and run. In fact, look what the market did. Like forget about what I'm telling you. How about this? What did smart money do? The moment it hit the target, it got the hell out. Okay? Yeah. No, that's right. But do not. Yeah, I guess there's a thought process in here that I'm trying to put to words where um, you're trying to put together what you want to do long term first. Okay, and that's based on wants. What do you want the market to do, and like why do you want it to do that? Well, you made a bias based on your research. Okay, that's what makes you an expert. Okay. So Ryan's trying to teach you how to pull the trigger and gain control of your tactics. It's all tactical, right? So at some point, you're going to make a bias which tells you what you want to do, which is based on your long term. And because you're a tactical expert, you can get it done. Okay? You can do whatever you want to do. And that's where we're trying to get you to, okay, Brad? You can do whatever the hell you want to do because A, you've done the research, so you have a plan, which is another form of strategy. And your tactical abilities are second to none. You can do whatever you want to do, and you can do it with effect. And if you're wrong, you know very quickly because none of this makes sense. You get in the fog of war and you're like, oh my God, it's an ambush. And you have to adapt. Okay? You have to have tactical precision. Otherwise your bigger plan is probably worthless, right? Like a sniper, I think it's a little dirtier than that. Okay? But look at this, guys. Like, what did you expect? Like, right? Like, look at that. You expected something different? Why? So, what I was trying to tell you back in here is as a bull, you're going to want this to break to the upside. But do you guys remember this part? I said this is likely to move sideways forever and ever and ever. Okay? So, we wanted to do this, but we also It's not that you expect, but you're not surprised in the least that it came all the way back. Okay? You see what I mean? So anyways, so you can survive this. If you know where you want to take this and you have tactical abilities to stay on plan, you can handle this. Okay? Cool. But would you agree that this is sideways? Okay. Now, you might make a big stink about the 2155. And if it drops lower, you're going to say, "See, Wayne, the 2155. This is sideways. By the way I'm defining this is sideways. There is no 2155." Okay? Yeah, well, it's hard, Brad. Like, everyone in the live group right now is going through tactical training, right? You have a drill instructor making you go do the drill over and 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 over. But there is no other effective means to make you disciplined. Break you down and build you up. So that's all that's going on. But yeah, at some point, brute force isn't enough, right? You're going to have a pretty solid strategy. So what if I'm teaching you, let's say, how to plan and come up with a bias? If I'm all strategic here, I'm teaching you how to be strategic, but you don't have the ability to tactically execute a plan, then what's the point? You know exactly what to do, but you don't do it. Like, right? And we were kind of talking about this yesterday. Like, even if I prep, even if you had a crystal ball, you look at it and you're like, I still can't make money. What? Right? I'm handing you strategies very often, right? So why not? Well, then the next level is the tactical capability. You're good enough, you're smart enough, but you still have to kick down the damn door and put bullets into the bad guys if you're in that situation, right? So whatever. Cool. Okay, so what I'm also trying to teach you is the world works on money, and money doesn't live on a chart. Money lives in a vault or in an investment, okay? Or it's flowing. If it's not in an investment earning some sort of return on capital, right? Then it's flowing, meaning my spending is your income, and then you go to Supercuts to get your hair cut, and now the woman at Supercuts gets paid, and then she goes to Applebee's and she has lunch, and the waitress at Applebee's gets paid, and then that person, yada, yada, yada. Okay, it's flowing. We call that velocity. So we're trying to get all these pieces of what money is. Okay? Cool. All right. So let's move on.com. We are one standard deviation from the weighted mean of June price action. Well, it's actually market action, right? Market forces, let's say. Based on what happened at June, we are one standard deviation from the mean. Okay, cool. Just want to make sure. Yeah, okay. If you think the world is shutting down for COVID 2.0, economic, we're not tracking deaths, we're not tracking infection rates, okay? We're economists. So we're talking about economic deaths, the death of an economy because it's shut down. Okay? If you're looking at a spike in economic death because of COVID-19 in the near term, this is what you're thinking. Okay? And if that's what you're thinking, if you're Brad and you're like, this is what I'm thinking, then now you have to have the tactical ability to carry it out. So where do you start? Well, first you make the plan, but second of all, you want to sell high. Okay? In a downtrend. Okay? Cool. So, if you know how to swing trade, for example, knowing this level is like having the skill to fall out of bed and hit the floor. You're like, oh, wow, cool trick. I mean, it's like, there it is. Like, it's so funny. There it is. That's it. 70.65. Yep. Not complicated. Okay, cool. So now, if that's your plan, you're looking to sell high in a downtrend. You don't like the fact that it's done this, but you're cool that it's done that. And that's what, I mean, this is why we lack trend right now. But all of this was predicted, by the way, so you're not even really upset by this. So now as a bear, what you need is how about a rejection off of obvious resistance? Well, this is obvious resistance. You knew it a week before we got there. Okay, and if you didn't know that was resistance, 70.64, if you didn't know that a week in advance, then there lies your problem. You have a giant gap in your technical analysis. It has nothing to do with your strategy. There's a giant gap in your tactical ability to execute. Okay? So fix that. So the next part of Brad's plan is, okay, Brad wants to take this down. Okay? So what's the plan this week, guys? If you're a bear on this pair, tell me. Come on. And I'd like to thank the 25% of you that likes our conversation right now. To the other 75% of the people that have not clicked the thumbs up button, please let me know what you'd like me to cover next. I will discuss whatever you need, but you got to participate. We can't love it if you didn't thumb up. I mean, it's such a simple act, okay? Okay, let me go back to this, okay? If Brad was a bear on this, then he needs to see a rejection off resistance to confirm the beginning of a potential new downward move. Okay, great. So, right, as obvious can be, 70.64 is the number. And there's 1 rejection, 2 rejection, 3 rejection, 4 rejection, 5 rejection, 6 rejection, 7 rejection, 8 rejection, 9. And then Brad notices, oh, whoa, now there's my rejection. Lower low, baby, off of the R line. Nice. So, what is the plan for the week? After a lower low, what do you need if you're trading a downtrend? You need a lower high. Cool. Let's zoom in a little bit more. What is the most important pivot for a bear? What is the most important one for a bear? What is the most important pivot for a bear that is swing trading? Brad nailed it. It's easy for Brad. He's in the group. Cool. You mean that? Okay, what is plan B as a bear trading off of resistance, expecting a downward move? What is your plan B? The top. So here's how it goes. Okay. You have to look for an opportunity in here. Okay. Now, you knew this way over here on Friday that you wanted to sell around 70 and a half, 70.5. Oh, midpoint psych, lower high, weekly M3. I mean, just straight up slap in the face obvious, right? Cool. So now you drop into a smaller time frame. Let me go back to that 70.5, and you know somewhere from here or here you want to get short. Where do you see it on a 15-minute chart? Do you see it here? Is that a good sell? FT9, I'm Illuminati. Or you can go to metatraders.com and pay $5 and have the tool. And it'll tell you in advance your support and resistance lines, not backwards. That's the problem with pivot points. Like, most people are using pivot points that are talking about this week. But we already planned that out last week. So some people are just showing up and they're like, oh, look at that. There's an M3. Dude, we already... Right? Oh, well, your pivot points. Anyways, this right here sucks. Where's your entry? There's no tactical entry. None, not even close. Okay? Here it is. Cool. Back. Cause you're looking for the same thing. It's a new thing. Check out this Supreme. I'm living low next to the base. Turn up the radio. You're claiming I'm a criminal. But now I wonder how some people ever know your enemy could be your friend or guardian. I'm not a hooligan. I rock the party and clear all the madness. I'm not a racist to preach to teach. Because some of you never had this. Yeah, right there. See, you knew you were ready, willing, and able. RWA. Ready and willing, able to pull the trigger. You know exactly what you want to do. We're brothers of the same mind, I'm blind. I don't rhyme for the sake of riddling. Yeah, anyways. Okay. It's not NWA. No. No way, man. It's Public Enemy. All right. So this is how you need to plan, guys. You need to know what you wanted to do last week. You pick out the prices of which you're going to trade. This is pure... Knowing what you want to do in advance is strategy. So, Brad, even if you're wrong, even if your reasoning is a delusion, right? Brad's like, oh, you told me to be selling off all the yen pairs. Whoa, whoa, whoa. I never said that, ever. But that was what he thought, okay? Because in a different part, I'm selling yen or buying yen pairs. So he's like, well, he puts the math together and he says, well, if Wayne is buying them here, then he must be selling them there. No, I never said that. Completely delusional. But it doesn't matter. If that's called a strategy, okay? Even if it's delusional, it matters none to me. And it matters really none to even the results. The most important thing is Brad had a plan. Okay? Brad's too smart. Right? So he's doing the math and re-engineering something that doesn't exist. That's okay though. Right? Can you imagine a job interview? Brad, we're so super excited that you have applied to be here in our firm. Can you tell us some of the challenges that you're working on personally? And you're like, yeah, well, I'm too smart. That's first of all. I mean, I got to get that out of the way right now. I'm too smart. What was the question again? Right. So anyways, in this case, there's a strategy. That's all that matters. Okay. So last week, okay, this is the plan. Sell off there, ideally with a lower low first. Okay. So this is 2 weeks ago, actually. Right? Then last week, we get our lower low. Ding, 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 ding. Right? Permission to engage. Fire for effect. Brad's like, woohoo, now I get to do something. Because for this week, there was no sell. And then here, maybe he tried, maybe he tried, maybe he tried. And you can do those. I tend to look for the lower low first. Okay? Why not? It's summer. Okay? Step 3 now. There are only 3 levels of resistance of which you can choose. Okay? Whatever. That's for the whole week. This is your sell zone for swing. And this is the range trade again. Okay? Cool. So, on Friday, your plan was to be ready, willing, and able to sell. In particular, this is the best pivot. Now you're like, well, Wayne, it sold off here. Yeah, well, what can I do for you? Okay? But you are RWA, but now this isn't strategy anymore. This is strategy. Okay? I can tell you you're targeting 69.76. Okay, but that's strategy. So now you're ready and willing and able on the open, and you're looking to get short. And now you're using technical analysis, your tactics, to get in the trade. So you could have actually sold in here. Sure. That's your alpha, baby. Whatever you got. Okay? And then the next level is here, and you're like, oh man, I hope it goes up to 70.50. And it does. And then you're like, whoa, no entry, no entry, no entry, no entry. Well, then you're like, oh, well, the next level is here, 70.7, right? 70.70. Consolidate, 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 lower low, lower high, 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 lower lower high, lower low, lower high. And where are we going? Where are we going? 60, 70. That's it. It's only a lousy, stinking 100 pips. All that effort for only 100 pips. But there's the target. And again, you knew that on Friday if you were a bear. You knew that. Your trade plan on Friday was zip, zip. Okay? Yeah, Brad, you're like, you'll be delusional if it's all working. That's fine, too. This is why I'd rather you have a delusional strategy than no strategy. What's up, Mandy? Okay? Because I don't know if any of my trade plan or any of my trading strategies, like trade plan is what I mean by strategy. I don't know if any of mine are delusional, and they probably are. Okay? Because ultimately, I don't know. It's not like I'm like, I press a button like, oh yeah, well that was CPI. Yeah, that was CPI. CPI was surprising. Were you guys surprised by CPI today? It's probably all on the news, right? Oh my God, CPI. Anyone surprised by CPI today? It was higher than expected. How could inflation be going up when the economy is crashing? Yeah, I told you yesterday, but still. but why? Just answer it, like, just why? Why has inflation gone up over the last couple of months? Half the economy is still closed, and the half that's open is reclosing. printing money. If you don't spend it, it don't go up. It's much simpler than that. Not the free money stuff. No. That pushes the stock market up. But that doesn't make prices go up. It's not Fed printing money, guys. It's not government spending. It's not free money. That pushes the stock market up. Okay? And by the way, the free money is to fill the aggregate demand hole. So we lost demand, so the free money just gets it back to where we were, but that doesn't create inflation. That stops deflation. Where did it come from? Low supply, that's more future. If that happens, that will be in the future. That wasn't in the past. Supply increased, no. Okay, let me stop you here. What is the major subcomponent of the CPI basket? What is the major one? It's so major, they usually have to strip it out because they're like, okay, this thing is screwing up our CPI data, so we have to actually cut it out. We don't even want to look at it because it moves CPI so much versus everything else. Demand is not part of, no, you're not talking about the basket. All right, let me show you. Let me show you. I got you. Hang on, everybody. And this is great because I find out you don't know these things, and I don't know that you don't know, and all right, cool. This is oil. Okay. In March, we were at $70. Sorry, in January, we were at $70. By April, we were at 0. We had a 100% decrease in the price. Okay. So in May and June, apparently inflation came in. Well, oil is used for energy. Okay. It's used for what? Food. Why food? Makeup. Jet fuel. Plastic. Do you guys own anything with plastic in it? How many people own something with plastic in it? How many people eat food that was fertilized? Okay. Even the roads you drive on are soaked in tar. So the way it works, you get a giant cooling tower. You've probably seen these somewhere. Okay. Okay, and we'll put it like that. So it looks like a giant cigarette. Great. So what happens is they add heat to this. Eventually they have to cool it, and that's why it's a cooling tower. So they heat up the oil. And as this product expands, so this is the raw crude, it gets hot and hot and hot and hot, and the molecules spread out. And at the top, the lightest things go to the top, right? And you get jet fuel. Okay? Somewhere in the middle, you get the stuff that's used to make plastic. And somewhere at the bottom, you have tar. It's so heavy, it just drops to the bottom. And then you get everything in between. This is called cracking. Okay? And they'll pull off the nat gas at the top, and with the natural gas, you can get nitrogen and potassium and, whatever, the stuff they use for fertilizer. They don't use cow poop anymore for fertilizer. That stopped in like 1822. Okay? So anyways, You get jet fuel and make up, and diesel, whatever. Okay, and up here you get nat gas. They suck this off, and then they crack the nat gas into fertilizer, and that's why it goes into food. But your food grows in the ground with petroleum products poured all over it, so it will grow better. This is called cracking. So if you drive on a road, have a truck, own any piece of clothing or any tool, or if you own a beach chair, everything in your life is made out of plastic, right? Makeup and what do you call that? The petroleum jellies and stuff, and then all the way up to gasoline and jet fuel. Okay, so you are a massive consumer of energy. Okay, not just energy, of actually WTI. And the only purchasers of WTI are refineries. This is called refining. Okay? Refineries buy the WTI. No one else buys it. The only buyers in the world are refineries, so that they can make products that they can sell at market. Okay? So they heat it up. It separates. The light stuff goes to the top. The heaviest stuff goes to the bottom, everything else. And they literally say, well, at this level right here, suck it all out. And the stuff we need for plastic goes there. And down here is diesel. And up here is gasoline. Up here is jet fuel. And they just suck it all off, and they have a product, and then they sell the product into the marketplace and to eventually you. Okay? Everything in your world revolves around crude. Everything in your world revolves around crude. Everything. And we went from $0 to $40 in the course of those 2 months. Is that inflationary? We went from 0 to 40. Yeah, thank you. Vaseline, that was what I was looking for. Okay. So how would CPI going up not have already been known? Well, of course. It's just... of course. Okay. Oh, going back to Kiwi, who knew on Friday? I'll show you. Let's go back to that. Okay, what do we know on Friday? Let's bust this out. What do we know on Friday? What does this chart tell you on Friday? We're right here. This is Friday. What do you know? What do you know is factual? These are basically set at this time. Okay? What do we know tactically now? I'm not predicting the future. You've already predicted the future at this point. If you don't know what you want to do on Monday or Tuesday, when we're in this little box here, that's your problem. And don't get all pissy with me. I'm trying to tell you that if you don't know what you're going to do on Monday and Tuesday, on this Friday afternoon, you are way, way behind the professional traders. Way behind. So I'm trying to push you forward. So I don't know what's going to happen on Monday or Tuesday, but I know what I want to happen. I know what I'm going to try to do. right? So Keb's like, so how do you know what's going on Thursday or on Friday? How do you know what's going to happen in the future? I don't know what the market's going to do in the future. I know what I'm going to do, and I know why I want it to happen. Okay, you still with me, KG? Okay. Okay. If you are a bull, you want this to go up. Okay. Then on Friday, you're buying in here. Or on Friday, you know on Monday you want to buy in here. Okay? If you don't know that, then we need to fix that. Now, it's a bit of a dangerous trade because of the lower low, and the 55 does confirm the double top. How many people have taken my, well, I guess how many people have read my book? Let's put it that way. How many people have read my book, even though it's like 12 years old now? How many people have read Strategic and Tactical Forex Trading? KG says you can't buy at the bottom of the zone. No, of course you can. That's the whole point. Where else would you buy? All right, so I need to know if this is factual. My book says that this predicts a double top. It's either a fact or it's not a fact. It's either 100% true or it's not true at all. Well, I'm not asking if it's 99% true or 80%. Is that what this predicts? Yeah, 100%. So I could argue I predicted this 12 years ago. I told you, KG, I told you 12 years ago. Double top, bro. All right. Is that useful knowledge to help you predict what you want to do in the future? See, that's another part of saying on Friday, you should have known exactly what you wanted to do on Monday and Tuesday. If that's all you use, like forget pivot points, forget price action, forget everything else. All you did was moving average trading theory. The basic, right? This is training wheel stuff. This is kindergarten stuff. If that's all you did, that was your one trick pony, then that was your trade plan. And you created on Friday, but you pulled the trigger on Tuesday, I guess that probably was. Uh-oh, KG's got to go out and do a dance. KG will be back after his song's over. Hey, man, whatever. You got to make the money. Yeah. All right. So there's one thing. Okay. Another way of looking at this is on Friday, you know you want a lower high. So you're actually predicting a lower high now. Okay? You're actually predicting. You're saying here, there's going to be a lower high. So let's use like price action. You're going to look at this and you're going to look at that, and basic price action is going to tell you this, right? Once again, kindergarten level price action. And then you know this is the top of the range. Cool. Then you're going to look at pivot points and you're going to say, well, the weekly pivot point's here, and then there's that there. And then you might even real body the top of this, and you're like, well, that's kind of interesting. And they line up a lot. Now, here's the interesting thing. And in the live group, I've taught people the math pretty intensely. The reason they're very similar is because that's what the math is actually doing. They're both telling you the same thing. Okay? This line is actually telling you that there was stuff in here that you should be aware of. This line is actually telling you that there's stuff there that you should pay attention to. If you've ever wondered, like, how does it all work? How does it know? Is it a self-fulfilling prophecy? Yes and no. It's just math, and it's telling you what you should already see. So it's just another level of, hey, dude, there's stuff going on here, and if you were a bear, you'd probably want to sell. Okay? Also, a bounce at 70, a rejection at the midpoint psych level, all of this is pretty simple. Okay? So what I'm getting at now is if you had been Brad and you made a decision, right or wrong, no one even cares. Right or wrong is irrelevant. There is no right or wrong. Brad says on Friday, I want to dump this. Cool. Okay? These are, right? These are the three options. Okay? Let's do it that way. This is the best option because it's the best price and it's higher. It's a better lower high. But if it turned here, right? So let me put this back. Brad probably should have sold here on Sunday. Took a shot. And lost money. So what? Then Brad was RWA right here. Ready to pull the trigger. But there was no event. There was no tactical, no technical trigger. So he waits for the ambush, waits for the ambush, waits for the ambush. And it occurred here. Okay? What's the target? Same place we thought on Friday. So the general plan is this is a sell zone. This is plan B. That's fine. And there's the exit. So like for a few people were like, you know, what do you mean? How do you know Kiwi Yen's going to fall on Monday or Tuesday? Oh, I don't. Oh, I really don't. Okay. Here's what I would like to have done. I would have liked to have bought this. That's a big plan. What do I expect? Okay. So in the live trading group, maybe 2 or 3 weeks ago, I taught this to them, and I actually said, you probably want to pay attention to the R1s and the S1s of our ranges. That you still buy the M2, but instead of going for M4, you're going to R1. You can still sell the M3, but you're only going for the S1. Now, you can hope to go further, but you really got to manage it properly. So technically, based on that advice, as a bull, I would have made my full Monty for that week under the income-based rabbit shooting model, and then Brad would have taken his shot and made the same amount of money, and then by the time we hit Thursday or Friday, we're back at 70. Okay? Or we get a breakout one direction or the other, and if I'm wrong, I will adjust. And if Brad's wrong, he will adjust. Thank you, Daniel. I appreciate the work that you put into it every day. I really do. Brad pulled the trigger. Yeah, Monday morning. That's funny, Monday morning. I'm a Sunday guy, man. Right? Aren't you in Florida? Yeah, you need to be pulling trigger Sundays. Okay. Yeah, that's great, Cave. What we should probably do, one thing that you might want to do is don't increase your lot size for a while. Just keep doing the 6%, but grow your account. Because you'll get, let's say you'll continue to do well pip-wise, but as a percentage, your percentage will cool off a little bit. And you're like, well, you know, I only made 5% last month, but that's okay. Because what we really want is your assets under management to grow, right? So if you're always consistently hitting 6, maybe we can taper it back, or maybe you just got it perfect, right? Maybe you have it perfect. But my concern, though, is you're hitting that in the summer, and often that's a little bit high, that's high for the summer, but maybe you're just doing things really well. You're just getting it. So keep it up. Maybe I'll fund you. Right? Stick with us, Cave. If I don't know you, I can't flow you. So stay close. But what I want to see is you're doing 6%, but let's say you're making 2,500 pips a month. If I find you're making 250 pips and you're doing 6%, you're ridiculously over leveraged. Unfundable. Like that's it. That's all you make. 250 pips. That's it. And you're returning 6%. Way too leveraged. Okay? Okay? You got to get to a point where 1,000 pips is a mediocre month. You're like, eh. Okay. Okay. So keep it up. Slow and steady, steady and slow. That's what you want to focus on. And as you do that, lower your lot size relative to your account size. And the best way to do that is don't increase your lot size. If you have 10,000 and you're trading one mini, get it to 20,000. Continue trading one mini instead of two minis. Now you have half the amount of leverage that you used to have. So now you have half the risk, but you continue to provide steady returns. And that's a very good thing. Okay. Gorgeous. Gorgeous. I used to live right on the border of Bel Air. Not for long. I was just doing a startup, but that's right next to the little village. I can't. What's it called? Westview, Westwood, Westlake Village. Right there. It's kind of fun because you could walk into town. There's nice restaurants, nice bars, and nice cafes, and nice grocery shopping. On says, what percentage risk should I trade? As low as you possibly can. Okay. So like one way to do it is like, well, if you had $1 million, if I gave you $1 million to trade with, right? And you're like, okay, well, if you're trading, okay, look at your lot size now. Okay? And if you continued that ratio and you find that if you had $1 million and you stayed at that ratio, oops, that wouldn't be, under those conditions, you'd be trading 2,005. Man, I did the dollar again. under those same ratios, if you had $1 million, you'd be trading 2,500 standard lots. You know, it's sort of like that stand-up comedian, right? You might be over leveraged. Right? But like 1% on one trade is even high. I mean, right? So here's another way here's another way of doing this. Okay. Okay, on. If you lose 5% of your trading account in a month, in less than a month or whatever, inside of a month, it could be a week, it could be a day, it could be in 30 days. If you lose 5%, you should adopt a puppy. In particular, if you don't want one. And this puppy is going to live with you for years and years and years and years. So if you produce a negative 5%, I want you to do something that will negatively affect you for years and years and years and years and years. Okay? And this dog is going to cost you money. It's going to crap everywhere. It's going to piss all over your house. You're going to have to walk it 2-3 times a day. And it'll keep nagging at you. Hey, man, do you remember June 2020? You lost negative 5%? Yeah, I'm just here to remind you. Because I'm here to remind you of the mess you made in June 2020. Yeah, and that's that. So if you lose negative 5, that's that. Okay? As you approach, let's say you have another bad month and you now are down 10% over 2 months, you may be fired. Okay? Last samurai says, come on, Wayne, a drawdown to 5% is nothing. Compared to what? Not fried, fired. Okay? So as you get to negative 20, if you show someone that you have produced negative 20, now you're an absolute return fund. This is what Forex is. And you say to someone, well, if you look at my track record, I could lose 20% of your money, and particularly fairly fast. Or I can make you 100% or 20% or whatever. Your stats are horrible, bro. And you start looking at this, at your distribution, and you got these fat tails where you might be negative 20, but you might be plus 20 and all this stuff. And it's like, well, nobody knows what you're going to produce. And the problem is, if they look at your trading history right now, you'll be okay. But if they add one more month, oh, your performance is way down. Like you add a volatility where you might be like plus 2, plus 2, plus 2, plus 2, plus 2, plus 2, negative 12. So if you just add one more data point, it gets unbelievably skewed. We call that a fat negative left tail, right? And all of a sudden, every once in a while, every fifth shot, you put it in the water. Or even every 10th shot, you put your ball in the water. Now, most of the time, you're brilliant and you're steady and you hit a lot of fairways and you're a pretty decent putter and you can scramble and you can get out of the sand trap. But the problem is, every 10 or 20 shots, you put a ball in the water and you get a penalty and the round is over. So you can't do that. And meanwhile, they're looking at an apartment building. Okay? That's not how you spell it, but let's just put it this way. They're looking at you or real estate. Now, you promised them something. They can't see it. They can't touch it. They can't do a drive-by. They can't, nothing. You promised them out of air that you can produce some sort of results. And they're like, yeah, they don't believe you, by the way. They don't even believe you. Okay? Okay? But this is your competition. They say, okay, I have a real building, and for the last 20 years, it's produced an annual income of $600,000. Okay? And I have 350,000 in expenses. Okay? Which means, right, $250,000 a year in net operating income. And this can all be verified, which is the same as a track record. And then there's a loan. And your loan servicing costs $120,000 a year. And so now this investment, right, will produce $130,000 profit every year, year after year, year after year after year after year. Okay? If the market for rents go up, oh, you just raise your rents as you have rollover, because most people only rent for a year or two, right? So as they move out, you jack up rent a little bit, and now your net operating income goes up. Your expenses are pretty stable. Okay? And you just do this. And now someone says, well, if I just buy this apartment building, my net worth will go up $130,000 like that. That's per year. So if you do it over the year, over 8 years, and then you sell it at a higher price, then you put the not just the income, but now you do the capital appreciation, discount the whole thing to present value, and you have an exact number. So if I invest in this real estate deal, let's just say, and you expect to sell it in a certain amount of time, in a few years, and at a certain price, and you know this from comparable rates, and you I will earn 15% a year. Okay? Almost guaranteed. And then you come up and you're like, well, I might do negative 20 in 1 month, or right, I might go negative 20 in a drawdown, but I might be up 80 here. Okay? And a risk-adjusted analysis will almost certainly, like, do you want maybe 80% or maybe negative 20%? Or would you like in your pocket, guaranteed by something you can go touch and smell, and be guaranteed 15% a year, year after year after year after year, and you don't do anything? Which one do you want? Maybe 80%, maybe negative 20, maybe somewhere in between? Or this, which will appreciate, and then you could take equity out of it and put that into another property, and then it earns 15%, right? You're not going to raise money, bro. I'm not even talking about institutional investors and stuff. I'm talking about sitting down with a rich person that you know that's got money and is always excited about entrepreneurial ideas. And you're like, well, last year, right, I had a drawdown of 22%, but it's okay because I ended the year at plus 80. They'll never invest. That's all I'm trying to get to. Now, if you're trading your own money, then you can tolerate that. But what I'm trying to share with you is that your track record will not be competitive versus other investment opportunities. So your discount rate right off the bat is 15%. And you're like, well, what does that mean, right? If you're negative 20, okay, and there's something else is 15, they'll take the 15, but now you're competing with that, right? So like you need to produce, let's say, if you have produced a negative 20 and someone else has a sure thing at plus 15, you need to show them a risk-adjusted performance of a minimum 35%. And that's only to get you comparably like a risk-adjusted performance. That's just zero, adjusting for your risk, that you will have to show with very little volatility over the course of 5 or 6 years or 20 years. The apartment building can show 20 years. And you're like, well, I did really good last year. Dude, you're not even competing. So if the apartment building can show you cash flows for 20 years, and okay, let's say over the next 3 to 5 years, you should be able to show with very low volatility, you can produce a minimum of 35% just for them to think about it for a split second. And they'll say, okay, so you went negative 20 this year. Why was that? You're like, hey, remember that whole COVID thing? Well, I built up a portfolio and it took it down hard and fast and I had to readjust. But if you look at the other 4.5 years, you will see that those were really two really strange months, but I did recover. Okay, do you see what I mean? And they'll say, oh, okay, that's an anomaly. Like the negative 20 makes sense because that negative alpha matches the negative beta. And you're only down 20, but the market was down 30 or 40 or 50% depending on the stock or the other investment, right? So you're like, well, yeah, so I took a negative 20, but the market took a negative 40. So because of my risk management skills, we were down 20, and that's a good thing. But you'll also see in March, April, May, June, and July, we slowly but surely recovered. Okay, now you got a game now. Now you might compete. If the other 3 or 4 years were very steady returns to the investor, this is after fees and everything, in the investor's pocket, 40, 50, 60%. If you can show that, they're like, okay, this is interesting. All right, you adjusted well to the hard times. And you say, well, yeah, so you're a real estate investor and you might be able to adjust rents quickly, but if you had to sell your apartment building, it's not liquid. And if we happen to be in a bad time when the stock market was down 20%, people are not going to be able to buy this at market value. You're going to have to take a huge haircut on your asset, which might be 60% of what you thought your profits were going to be. So you're in a real bad spot there. So one interesting thing about investing with me versus in buying another apartment building is that we are completely liquid. And they're like, you know what? This is a very compelling pitch. You're like, I know, right? But I'm telling you, if you're going more than negative 20, you're fired. I mean, seriously. You're fired. People just give me my money back. And then if you're doing, PAM style kind of thing, they'll just pull their money. You're like, oh, wait, where did that account go? Yeah, it closed. They withdrew their money, walked away. Nobody wants your negative 20. Nobody. No matter how much they love you, they don't want your negative 20. Why? Because they can get better returns somewhere else. You always have to remember, you're not competing against another Forex trader because people don't know other Forex traders. You're the only Forex trader they want. You're the only shot. Right? Right? Well, you probably wouldn't start a hedge fund proper. You would just be licensed and registered and have like a managed account. You wouldn't actually start a proper hedge fund. But to answer that question, generally you need a trading team. You're going to need a compliance person that also does accounting and risk management. And that's probably it. I mean, you could have a hedge fund with just like 4 people and then you hire the rest of the staff. Okay. Cool. Anyways, I really tried to be all technical analysis today, and I just answered your questions. But the big thing I want you to leave with this. How do you predict the future? First of all, you have to have an opinion. That's it. That's how you predict the future. You come up with an idea. You don't even have to be right. Okay? Many cases, it's just 50-50, up or down, or up, down, or sideways. But I'm trying to have you have a bigger point of view, like, will the stock market go up in the next 6 to 12 months? That's further out, where you can just say, oh, well, definitely up, or, oh, definitely down. And the answer, actually, this is the awesome part of it, the answer doesn't even matter, but you have to believe whatever you want. I mean, you have to know what you want. You have to look at the data, interpret the data, and make a decision. And it could be a flip of the coin. Absolutely. But that's now you're set in stone for the next 6 to 12 months. Okay? That's called strategy. The next part is you become hardcore disciplined to carry out your mastery at technical analysis. Okay? And you either do it or you do not. There is no try. Okay? And we're going through this period of consolidation, low volume, and low volatility. But you knew this was coming. You knew it. So this is why we're spending a lot of time on fundamentals. This is why we're spending a lot on trader psychology. Some people are logging in and heckling. It's all yeah, and blah, blah, blah. Okay. I'm just trying to get you through this period. All of this was expected. So it really comes down to, have you adjusted your behavior? Technical analysis has not changed. Fundamental analysis has not changed. Market conditions have changed. How do you adapt? Income, asset appreciation. Okay? So the best way to do this is day trade your way through it. That's what I've always been saying. You set up you set up a bigger move, right? Not even monthlies. We threw monthlies out last month. You use your weeklies in the direction of your fundamental bias. You still enter good trades using your technical analysis. You don't expect the follow through you typically get. And then you enter more trades or manage your risk through day trading and market opens. That's the message I try to give you every single day. So I hope that's not a waste of time. Because I'm getting lots of feedback that the webinars suck, that the feedback is stupid, and that I say you can't do this and you can't do that. Whoa, whoa, whoa. Whoa, 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 whoa. I'm saying we are blessed to have an opportunity in front of us, and that the most important thing we need to do is simplify and see the bigger picture, but then it comes to us as individual traders to execute properly. And if you do that, I think you'll do just fine. And I'll be here for you all along the way. So peace on earth. May the pips be with you. May your profits be above average. And I want nothing but the best for you. So I'm glad we're on this journey together. I appreciate you in my life. I will see you tomorrow.